Hello, everybody. Welcome to today's financial literacy series. Today, we're going to be diving into a topic that is super important for managing your money: taxes. Now, taxes might seem complicated, but we're here to make it simple and easy to understand. So, what are taxes? Well, taxes are fees that government charge on your income, purchases, property, and more. These fees help fund public services like schools, hospitals, and roads. So now let's look at the different types of taxes. Well, there are two main types of taxes: direct tax and indirect tax. So direct taxes are paid directly to the government by you or your employer. Think of an income tax and property tax. If you earn $50,000 a year, you will pay a percentage of that as income tax. So you will be paying this directly to the government. Whereas indirect taxes are added to the cost of goods and services. So sales tax is a perfect example. So for example, when you buy a $100 gadget, you might pay an extra $5 sales tax. So these are the taxes that are added on the bill for the cost of these goods and services. Now let's understand these different types of taxes. So the first type of tax is income tax. This is a tax on what you earn. The more you earn, the higher the percentage you will pay. So for example, Jane earns $40,000 a year and pays a part of that as an income tax. Then we have sales tax. Well, sales taxes are added to the price of things you buy. So for example, John buys a $500 TV and pays an extra of $30 as a sales tax. So the income tax is direct tax and the sales tax is indirect tax. Property taxes are a tax on property you own, like your house. So for example, Sarah owns a house valued at $200,000 a year and pays $2,000 a year in property taxes. That is a direct tax. You'll be paying that tax directly to the government. Now let's look at the payroll tax. Employers take this from your paycheck for Social Security and Medicare. This means that Emma sees part of her salary go to these taxes every paycheck. So in payroll tax, they will just take money from your income or your paycheck for your Social Security and Medicare. Then you have corporate tax. These are the taxes which are on a company's profits. So for example, if the ABC Corp makes $1 million in profit and pays a percentage of that as tax. So the government will also tax on a company's profits. Then you have excise tax. This is a tax on specific goods like alcohol and gasoline and tobacco. So for example, Steve will pay an extra tax on each gallon of gasoline he buys. So these are special taxes on special goods. Now let's look at how do you file your taxes? Well, filing your taxes might seem overwhelming, but we will break it down in easy steps for you. The first one is to gather your documents. Collect all necessary papers like your W-2 form, which shows your earnings and taxes paid, 1099 forms, which is the 1099 forms, which shows your other income, and receipts for deductions. So this means that Mark keeps a folder with all his tax-related documents. Then you want to choose your filing status. This affects your tax bracket. There are different tax brackets. So the first one is you have single tax, you have a single status. Are you single? Are you married, filing jointly? Are you married, filing separately? Are you the head of household? So Lisa files as a head of household since she supports her child. So your filing status affects how you will, what your tax bracket would be. The third thing you want to do is calculate all your income. You want to add up all your earnings from jobs, freelance work, interest, and dividends. So for example, Lisa earns $35,000 from her job and $5,000 from freelance work. This means that you will combine these incomes all together to get your total income. Then you want to apply the deductions and credits. Deductions will reduce your taxable income, whereas credits will reduce your tax bill directly. So for example, David deducts $12,000 as a standard deduction and gets $1,500 earned income tax credit. So the earned income tax credit EITC is if you're low income or something, you will be earning income tax credit if you fall in the low income bracket. Whereas now let's compare the deductions and credits. So deductions will reduce, that means you will reduce your income. So like you will remove all the costs from your income. And what the credits would do is they would reduce the amount that is being taxed. So if I have a $1,500 tax credit, I can use that to reduce the amount of tax there is. Then you want to determine your tax liability. You want to subtract deductions from your total income to find the taxable income, then use the tax tables to find out how much you owe. So for example, if you have an income of $28,000, which is taxable, then using the table you would realize that you owe $3,000 in taxes. Then you can file your tax return, which is what you can do is you will be filing for your tax return, and you can do this electronically or by email. Tom uses software to e-file his return. You can also do that. Or you can also, the next step is to also pay any taxes that you're owed or receive a refund. So for example, pay what you owe to avoid penalties or get a refund if you overpaid. If you overpaid in your taxes, then you can also get a refund for that. So for example, Sarah owes $500 and pays it online, while John gets a $200 refund because he paid extra. So you can apply for refund as well. Then now let's look at the tax brackets in specific. Well, income ranges taxed at specific rates. For 2023, single filers pay 10% on income up to $10,000, 12% on income between $10,000 and $40,000, and so on. So Maria's income falls into different brackets, so she pays different rates on each portion. So according to your status, your filling status, you will be determined on your tax bracket as well. And also it's how much income you earn. The more income you earn, the more tax there will be. So tax deductions will lower your taxable income. Examples include the standard deduction and mortgage interest. If your income is $40,000 and you have a $5,000 deduction, your taxable income is now $35,000. So this will be reducing your taxable income. That means the government will tax less on your income after the deductions. Then you have tax credits. This will reduce your tax bill directly. Examples include the child tax credit and education credits. If you owe $2,000 but have a $1,000 tax credit, that means you will only owe $1,000. So the tax credit will reduce the tax bill itself. So understanding taxes is crucial for your financial health. By knowing the basics and following these steps, you can manage your taxes effectively and avoid stress. Stay organized, use resources, and seek help if you need it. You've got this. Thanks for watching.